Hello traders and welcome to our today live course as we were continuing studying the institutional trading. We have reached to the concept called institutional price levels, and we are going to discuss about this today in our session. Institutional price levels are the price levels or the important price levels which we can see the price action is reacting to that, and it's usually happening and it's usually acting as a support and resistance. There are different things that which we can discuss about IPL. First of all, definitely we are going to introduce what is IPL, and after that we want to see how we are going to use it in conjunction with other concepts we already studied, or the blocks and the breaker and the order flow and the source, so these kind of things, and then we will see how this is going to act as another factor of confluence to take a trade as entry, as take profit, or even we can look at it to consider how to set the stop loss. So that's all. And once we finish the theory, we are going through the chart. I'll give you one example before we go to the chart. So let's start by defining what is institutional price level and what are those levels actually. There are different institutional price levels, which is actually, we have it as, first of all, is the 200 level, then it is 500 level, 800 level, and round numbers. So basically, these are the levels that we will see that how price is going to react to these kind of levels as support or resistance, and even how it is going to work in conjunction with order blocks and when we have the order flow, so we can see these levels are acting accurately for the pullback and the retracement. So it is, just imagine if we mix this institutional price level together with Fibonacci retracement, the order block rules that we have, which is the touch and 50% of the order block. And even when we have the breaker and we can see the change of the structure, so we have the order flow to the upside, so then we can use these levels and we can predict the reaction of the price to these kind of levels, which is useful for us to set our entry, take profit, and stop loss. So as an example, just for the sake of theory, then I can show you one screenshot in after this. So do you remember that we had this kind of price action that is going up? So we have this bullish price action, and then we have the bearish one. Okay, and definitely you can recognize the whatever time frame it is. So just imagine maybe this is just 1 hour order block. So definitely we know this is the order block. And just imagine uh, that this line, these are the just price levels that I'm going to set here. I will tell you which one is which. So just imagine this is the chart is for Euro USD, and it is H1 time frame. So the top one is 120 level. Okay, then the next one is 119,800 level, and we have 119,500, and we have 119,200, and here we have the last one, which is 119. Okay, so as you can see here from the top, once we got this bullish price action here, then we got a major price pushing down, and here we broke below this last push up, so that's why we got H1 order block. I suppose that you know this from the previous courses we have discussed about it. And you can see the price is pushing up to the 120 level, which is the round number. So this is the round number 120, and 120 is the round number which the price is reacting to it and is rejecting. So it's acting as resistance. So it's acting as resistance. The price is coming down. It's giving a bearish engulfing, and even it's passing through 119,800, which is the next IPL. So it's passing through, coming down, even it's breaking below 19,500, which is the next IPL. And after breaking this and closing below, we will consider this as order block. And you can see this push down is stopping exactly at the next IPL, which is 19,200. And when we go through the examples, I will show you different example, which is proving that this sort of price actions are happening multiple times. So basically, it is something that you can count on it for the finding the right setup and taking the trade. So this one, you can see it's coming back up, And then it's coming back up to the 19,500 level. And at this level, we have the touch of order block. So as I was telling you in the beginning of the lecture, sometimes you can use the IPL in conjunction with other factors. So as you remember, I was telling you, if we have the order block, basically we can have the entry either at retest, which is the touch of the order block. So we can consider this as entry one, and or as a second entry, we can have the retracement to the 50% of the order block. So in case if we have the continuation of this bullish price action back to the second entry, then we can use this as entry 2. So if you see here, the entry 1, we have the touch of order block. Also, we have the IPL level 19,500. And even if you think more about it, you can consider, if you consider the Fibonacci from here to here, definitely this pullback is around 38.2 Fibonacci retracement. So we have 3 things which is giving us confidence to enter the trade as entry 1. So just imagine if we don't have this candle, and at this level, if we see the rejection, even maybe it's coming with the wicks, yeah. So this kind of rejection, if we see, we can enter into the market as we have the touch of the order block as the retest. We have the IPL level, as well as we can see the Fibonacci 38.2% as well. So this is a good level to enter the market. So actually, at this example, we are looking for the case of entry. But as I told you in the beginning, the IPL is used not only for entry. You can use it even for a stop loss and for the take profit. So imagine this is our entry. Okay, so imagine we are taking this trade here. So this is our entry level. Okay, and now you want to set the stop loss and take profit. So for the stop loss, as you know, we said before, you can put the stop loss above the order block. But now, even if you want to take a smaller risk, when you see the complete reaction here, and basically, I will put the first stop loss here. And when you want to manage your trade, and when we see this kind of price action, which is breaking through the next IPL 19200, once you see this low is breaking, then you can consider bringing the stop loss down, and I suggest to put it above this second IPL. So setting a stop loss here can be fine, and even when even you can consider it to set it above this high. As you can see, the rejection from this IPL 19500, so probably 10 pips above is 19600. So you can set the stop loss in this case because this low is broken, so you can consider putting the stop loss here. Basically, my suggestion, let me just repeat something for you. Once you enter to the market here, okay, initially, as we discussed, the stop loss should be above the order block, okay? But this method is used when you have the order block and when you don't want to consider IPL, okay? But as our course is about IPL, then I'm recommending you to keep the stop loss above this IPL instead of that high. So basically, by considering the IPL, you can reduce the risk and set the stop loss here instead of here, okay? And when the trade is going into your favor and is going down, is breaking this low, then you can bring, once it's breaking down, once you see this price action, your entry is here, your initial stop loss is here, then you are going to move your stop loss to above this reach. Above this reach, which is the, we are putting it basically at 50% Fibonacci and above this IPL. Okay, so you can use IPL and Fibonacci to set a stop loss and entry and take profit. Okay, so now we learn how to set the entry and we learn how to set a stop loss, and also we learn how to manage the stop loss. Our initial risk was this much, and after moving trade to the downside and we are in profit, our second risk is this much. Okay, so basically we are reducing the risk from this high to this much. Okay, then let's continue with the price action. You will see the next candle is coming down and is stopping at next IPL, which is the round number 1.19, this level. Okay, and you can see the wick because it's rejecting, so it means this level is acting as support. Okay, so here when I was entering into this trade, okay, I could set the first TP at 0 Fibonacci or first near IPL, TP1, and this one has TP2. Okay, so basically in this trade we have only 2 TP, and you can see that the first TP, which is 0% Fibonacci, in conjunction with the IPL is hitting the target profit number 1, and then it's going down and as a minus 23 Fibonacci, and the round number, which is the IPL, is hitting the TP number 2. Okay, but by the way, it's not always like that. Definitely that Fibonacci level is exactly at the same level of IPL. So this is a point which you have to pay attention to. Okay, sometimes maybe Fibonacci is little bit above or below IPL, which you can neglect it and you can choose one of them. Okay, definitely I recommend you consider IPL as a priority to Fibonacci even, because IPL can protect your trade to be to your stop loss to hit. Okay, because you are not sure if the price is exactly reacting to the 38.2. Okay, but normally the IPL reaction is there, and at least for the sake of to be on the safe side, it's better, for example, if 38.2% Fibonacci is showing as 19,450, then don't put the stop loss, don't enter the market, sorry, don't put a stop loss there, okay? For example, I'm telling you, this is stop loss, you moved it here, right? So you reduce the risk this much. So when it's hitting TP1, you can reduce the risk again and bring down the stop loss to entry. Okay, what does it mean? It means when you bring the stop loss to the entry, as I told you before, we call it risk free trade, right? So at this risk free trade, what I mean here, I'm saying this entry which you are using as a stop loss now to make this trade at zero risk, you can take IPL into consideration and put a stop loss, for example, at 19,550 instead of 19,500, because this 19,500, it may get retested again and maybe we can see the rejection again from this area. So if you want to avoid your stop loss to be hit, better to keep your stop loss above, in this example, above each IPL, okay? Not exactly on the IPL, because IPL has the potential to be heated. Even if I want to be more specific, I can tell you sometimes when you have news event, okay, the price is moving to one of the IPL just as a reaction to that news. Okay, so this is what is happening, and that's why to avoid so to avoid your stop loss to be hit, okay, always set it far from, by far I mean like at least 10 pips far from IPL. Actually, kind of 5 to 10 pips, okay? So that's it, guys. This was the theory I wanted to discuss with you about IPL. So as a summary, we learned the IPLs are set as 200 level, 500 level, 800 level and the round numbers. So all of the round numbers, 120, 119, 118, 117, 116, and so on, are considered to be as institutional price level, where institutions, big banks, big financial institutions, they are looking to these areas to enter to the markets. So we are using it as entry, as a stop loss, and as take profit, because money is getting accumulated there. Okay, mostly big banks are using these levels to do something in the market. Okay, by to do something in the market, what I mean to put their orders, to take their money, okay, or even to take the money of retail traders. So here I'm going to show you one example. Just stay with me for some seconds. I'm going to show you one example here. Okay, so we are back. Let me just show you this example. As you can see, this is the example we have for the Euro NZD. Time frame is H4, and you can see how we have the different IPLs are highlighted in this chart. So as I said, the IPLs are these levels, and all of them, as per our color code for the IPL, we are using the horizontal green line. Okay, so green horizontal line is considered to be as IPL. Don't pay attention if these numbers are not exactly accurate, but it's almost in the same level that we know it has to be. This is just some, because it could not be set exactly maybe at that level, but you consider it as exactly the same level, okay? So if I see it from here, if I want to analyze this is going to this IPL, breaking above, coming back, and then again going up. Coming back, see, is touching the IPL. So the IPL is like order block. It didn't touch here, it touched later. So it was like a gap. So the IPL gap closed. So basically we have some kind of IPL gap as well. So same as order block, when we see the order block is not getting retested, we are counting as pending retest. And you many times you saw that order block is getting retested later at one point of the time. So this is same thing. So it's coming back down, retesting this IPL, and then moving up to the next IPL. Okay, so you can see all the weeks are there exactly at different IPLs. This 172 as the round number, you see how the price is coming down, back up, retesting this IPL, coming down, back up again, retesting the even 72, 200, and again coming down. So you can easily take into this trade and use these levels as entry and even as a stop loss, and down as the take profit. So if we enter into market here, you can take profit here, take profit here, and take profit here. So you can see the last IPL here down, which is 69,500. It was acting as a support previously here. By the way, this is the 4-hour chart. So it's almost a big picture of this price action. So you see it was acting as support here. And again, it's reaching to this stage and acting as a second support. So we have double bottom here. So when we are talking about double bottom and double top, you see that IPL even is helping us to identify double bottom and double top, because this is the down, it was downside. So we are expecting this level to act as the second time support, and it's doing that. Okay, so basically if you were selling the market to this down, you could take the profit exactly here, and you can see the price is coming down, and so you can easily set your one of the target profit here, and you can put the ultimate target profit here, which was retested before here. So this level is getting hit. So that's why I'm saying the IPL can be used as entry, TP, and stop loss. Okay, guys, thank you very much for listening and paying attention. Hopefully, these materials are going to be useful for you. We will continue with our session after a short break in the second part, and we will discuss more stuff. So we're having break, and we are coming back soon in 2 minutes. See you then.